What are some of these red flags?
I think some of the concerns that I have are in terms of the valuation. I recognize that these industries are generating real earnings today from AI. NVIDIA is generating very, very powerful earnings. And so if we look at that multiple on an earnings basis, it doesn't look wacky or crazy. But the expectations around that multiple are very high, both in terms of the revenue growth and the margin expansion. And I think if you get a whiff of any softness in that momentum, that valuation suddenly looks very expensive. It happens kind of very quickly. So, my concern is think of valuations in terms of expectations. If there's anything my parents learned, it's that having high expectations can really set you up for disappointment in the long term. You got to be careful in managing those. And that's a little bit my concern here is, we just expect AI to be on this kind of straight line path of growth, but we don't have a ton of business use cases for it just yet. We don't really know how it's going to filter through the system. This is not dissimilar from when the internet first came out, right? We didn't know if the best use case was going to be for cat memes or transportation logistics networks, right? It wasn't clear. And I think we're still at that point here with AI where we're not sure exactly what the use cases are going to be.
Yeah, no, that's certainly a great point. You're not telling people to avoid all the mags, or should we? I guess we take Tesla out? Is it the Super 6 or Fab 5 or the Fantastic 4 or the Terrific 3? Or how low do we go here, Julia?
I think it's more a function of looking at all of these businesses and not being exceptionally overweight, right? I think this is kind of the challenge of owning the indexes right now is how overweight and how exposed you are to these businesses and the hopes and expectations around them, right? I would argue that Tesla is not really an AI play. It's still a car manufacturer with much more increasing competition in its space, and it still has to just bend the metal. It's just not a profitable business in the same way that a software business is. So I would take that out. But I think writ large, you have a lot of exposure when you own these passive indexes. And so you just want to balance that and make sure that you own other businesses that are not as expensive and don't have as high of hopes around them.
All right, let's talk about a couple of names that you do like. And these are unique names, but they've also had big runs. Simpson Manufacturing. I guess if you're not a home builder, you probably don't know who they are. They're basically building materials. SSD is the ticker. They've doubled in a year. A boring old industrial, and it's not scaring you off.
No, because I think that the long-term fundamentals around home building are still very positive. We are still very much underhoused, and that's something that has been structurally in play since the global financial crisis. We just do not have enough houses for the amount of population growth that we have, and supply has been really constrained because of high rates. People are just stuck in their houses with their low mortgages. There's no movement. So you've seen fundamentals for both the home builders and the building services providers that, support that doing really, really well. I think that can continue because I still think that the long-term outlook for those businesses is very solid. And, Simpson is a great case of that where they have 70% market share with their product, and they have been pricing before inflation was really a thing. They really have a lot of pricing power in that business.